A very good morning to everyone. Welcome to a brand new business and market week. We're starting the current week Monday, and we're effectively heading towards the end of September on Thursday. So keep that in mind. This is the market week for that. I am Bosun Omofayi, and here is Ibukun Omoyeni, who is the economist at Vetiva Capital Management. Good morning, Ibukun. Welcome to. It's good to have you on FOB.
Good morning. Thanks for having me.
Great. We'll do a little bit of a macro discussions with you and take a bit on the market side as well as some business headlines. Thank you so much. But if you just take a quick look at the market closing on Friday, Nigeria's weekly index was just around 0.05%, just about 1 day of gain. The rest were largely in the water. The PRVM was down by 23 basis points on Friday. The Egyptian market started the week, which was yesterday, Sunday, by 0.07. The Nairobi Bourse was down by 29 basis points on Friday, and the GSE was up by 1.10%. Let me take you straight. Let's go straight to the East African market, where Kenya import bill was up by 30% year on year, but down 1.3% month on month to 160 billion local currency. Deloitte says banks in Kenya must digitize and rethink their modes of operation. That's quite a bit from the advisory services firm. And ARC Cement is looking to liquidate after the administrators appointed about 2 years ago or 3 years ago now failed to revitalize the cement company and is going to self-delist from the Nairobi Securities Exchange. Good news as MTN lists in Uganda in a couple of months from now, if all goes according to plan. In the meantime, the telco giant is working on a digital platform ahead of that listing with the Uganda Stock Exchange. Mauritius' second quarter current account widens. India is giving the country about $190 million for rail services. Let's talk through the West African market, where Ibukun is weighing in very strongly on the macro side of the expected announcement from the Bank of Ghana in terms of its monetary policy direction. Nigeria's economic data is a little bit dry this week, with the exception of air transport data, which will be out today from the NBS. And of course, goodbye to Yewande Sadiku, whose 5-year tenure expires today as the head of the Nigeria Investment Promotion Commission. Let me give me a word or two quickly on Yewande Sadiku's tenure at NIPC and why NIPC needs a very good replacement to Yewande Sadiku.
Okay. Thanks for that question. So looking at Yewande Sadiku's tenure, we saw that she actually did a lot. We could point to the pioneer status incentives. We could also point to the state of stage report, which for me was a major highlight. So we saw that Yewande actually took upon herself to find out what is the major resource in every state of the country. So she actually pioneered that move, and that led to the production of the state of state report. So you could actually see the resources in several parts of the country. So I believe that's a good one, and she has actually laid a very good foundation for the NIPC to run further from here.
Okay, so if we go into the Ghana market, what's the macro behind the expected interest rate decision by the central bank?
Okay, so looking at the Ghanaian economy, we saw that in Q1, the economy grew by 3.1%, but in Q2, it grew by 3.9%. The reason why the growth was not higher than this was because the oil sector is still the mining sector is still contracting. However, the Ghanaian economy actually needs further stimulus for growth, right? It needs further stimulus. So we recall that earlier in the year, the Bank of Ghana actually eased rates by about 100 basis points, 13.5%. And as it stands, looking at growth, recovery still remains the prime objective of several economies in sub-Saharan Africa. Okay, looking also at inflation, because we said that GDP is growing, but it needs further room for recovery. So looking at inflation has risen for 3 consecutive months to 9.7%. And what that tells you is that inflation is actually getting close to the edge of the upper band of the Bank of Ghana's target. So the Bank of Ghana has a target of 6 to 10%. So at 9.7%, if you have further pressures, it could push beyond 10%. And I believe it's as a result of the several measures put in place. We've seen higher petrol prices in Ghana. We've also seen an increase in minimum wage. However, looking at all these factors, recovery still needs to be stronger and inflation needs to come down. So the question is, would the bank decide to hike or cut the rate? In my opinion, I believe it may just have to hold the rate to avoid giving a double signal to the market, since it had hit the rate by about 100 basis points earlier in the year. Deciding to hike the rate at this point in time will send the wrong signal. However, we see that there are current pressures in the market, right? Looking at the European Central Bank, which says it wants to taper bond purchases. The US Fed is also considering slowing bond purchases. But the only question that we want to answer now is when. Once the US Fed says it's slowing down, you could see a negative reaction across emerging market, and that's when you see central banks hike rate. So if that is not happening, there's actually no incentive for any of these economies to actually hike rates, seeing that there's still need to drive recovery in this economy. So I believe for the Bank of Ghana, recovery is going to remain the prime objective of this meeting, and is going to hold on to the benchmark rate at its current level.
Very interesting. Let's talk about Southern Africa a little bit, because again, the South Africa's central bank last week decided to hold interest rate unchanged as well. Of course, we know the stronger correlation that the South African economy has as an emerging market with the rest of the world than other economies such as Nigeria or Ghana in West Africa and even Kenya. But I'm looking at a very strong story within the Zimbabwean front as well, with their foreign currency receipts up by 32%. They're removing import duties for fertilizer firms. It looks like Nigeria tried something around that as well in terms of what it is to get the local fertilizers companies to produce locally. We have a deal with the Morocco's OCP. I guess that was signed not too long ago. Ibukun, what's the macro behind why fertilizer needs to be produced on African continent? Why is it important into agricultural production process, food sustainability, and all that?
Definitely, fertilizer is actually a key component of agriculture. It helps to produce better, and that's why you have a lot of research and development into ensuring better agricultural processes. So with fertilizer on the front, you could actually see better output. A lot of economies have low productivity when it comes to agricultural output. That's why the fact that we major on agriculture in Africa. But looking at Nigeria, for example, I know Dangote actually has some investment in real fertilizer and all that. And fertilizer is actually good for you to have those local investments. Removing import duties would help to actually support the local firms, and that will actually help to also support the farmers that require those fertilizers for producing, right? So once you remove import duties, like you making the cost of production lower, and that would actually drive lower output prices, and also that would also affect inflation. So once you have those incentives put in place, it helps to boost production and ultimately reduce inflation.
Well, we've got a whole lot on that front. If you get a fertilizer business right, you could cut off a lot of imports and save a whole lot of dollar imports that you spend on such. But again, we've got all it takes here on the continent. By the way, if you ask me for fertilizer, but again, let's see how some of these business deals keep going on with the OCP for Nigeria in Morocco, and what Zimbabwe is also looking at to reduce imports, because once you do that, it gives your foreign currency a bit of a lot of a breathing space, in the manner of speaking. Where are we with the North African stories? The Egyptian authorities are looking at the production of petrochemical, which exceeds about 4 million metric tons in 2020, 2021. And the Banque Misr, which is listed on the EGX, gets the largest syndicated loan of $1 billion US dollars. And the protesters in South Sudan are not giving up. So the oil ministry is appealing to the protesters to call off the shutdown of the country's oil industry. This way, net income up about 34% to about 58 million dirhams in Morocco in the first 6 months of the year, that's January to June. And Tunisia's net FX reserves up about 2.012 billion dinars. On the final note, Ibukun, with you, it looks like a number of frontier African countries seem to be getting higher net FX reserves from Tunisia. We've seen Morocco, we've seen some Zimbabwe. But Nigeria's FX story remain a little bit tight. What's your take? What's your position there at Vetiva Capital Management?
Okay, so looking at several African economies, we see that the uptick in reserves can be linked to improved tourism receipts, improved commodity exports. Nigeria particularly has not been a beneficiary because a lot of production challenges are holding back its oil production. We saw oil production fall to an historic low of 1.2 million barrels per day in August, and that was actually because of those production challenges, pipeline issues, lack of investment in infrastructure. This issue is also a similar issue in South Africa, where you have the ESCOM, the power company there, and the aviation company actually being held down by a lot of irregularities, right? So once you don't have investment in all these assets, it tends to affect production in the long run. And that's what is currently happening in most of these economies. But I believe the uptick in reserves is driven by the recovery in several economies, the reopening of the economy, as well as sustained demand for commodities and an uptick in tourism, especially within Africa. A lot of African countries are being visited as tourist destinations because of the high cost of going to the likes of Dubai and co. So I believe that also influences the uptick in reserves for the likes of Tunisia. So I believe once you have all these measures up together coming to play, we could see more reserve accretion across the continent.
Oh, great. We appreciate your contributions on the show this morning. Ibukun Omoyeni, who is an economist at Vetiva Capital Management. Thank you very much for coming through and wrapping it up very nicely for us. That's how we anchor the show this today, Monday, the 27th of September. I am Bosun Amofaya. I'll see you next time. Thank you, Ibukun Omoyeni, and thank you everyone for watching. See you next time.